One of the fintech innovations causing the greatest stir among the big banks is blockchain.
The blockchain, just as an entity in and of itself, is an entire global rewrite.
Banks spend in aggregate well over $100 billion a year on technologies that could be replaced by distributed ledger technology, and is hurting things like credit that could be extended to small businesses or the ability to make loans to consumers. My name is Charlie Cooper. I'm a managing director at a company called R3, which has brought together a consortium of 75 global financial institutions to build next-generation software based on distributed ledger or blockchain technology. So a blockchain is a decentralized database that is operated by many different parties that come to shared consensus, and the chain itself is updated in blocks. Rather than being updated transaction by transaction, the ledger itself is updated in groups of transactions.
Using the blockchain as a system of automated ledgering, you can have a healthier, better auditable environment.
We're often asked how blockchain developed out of Bitcoin. The inventors of Bitcoin created the idea of a virtual currency. Where it's evolved to now is a realization that while Bitcoin itself doesn't solve a large number of problems that financial institutions face, the underlying technology, what is referred to as blockchain, has tremendous potential.
We see blockchain as a hugely relevant technology, ultimately changing and rewriting the financial services industry as we know it.
What we're doing is literally rewriting the way in which large institutions manage their clients' money. The goal of that is to solve very specific real business problems that are faced by the banks. The more money you take out of the system investing on infrastructure, the less money there is being put in to service your clients' needs. If you think about every time that you use your ATM card or your credit card or you're transferring money, well, that's real money out of real people's pockets. If you allow the banks to do their jobs more efficiently and cheaper, they can then pass on those costs to their retail consumers. It makes the entire system more efficient. If we're right, and we believe we are, this technology could revolutionize financial services in the same way the internet revolutionized media and entertainment.
What you're seeing now is that banking and the financial sectors are one of the few sectors who woke up and paid attention and are starting to really work and adopt on these new technologies very quickly.
We believe that this is the next step in the evolution of money, and we strongly encourage financial CEOs and everyone else in the C-suite to think about how this technology could change their business model now rather than to find themselves in a reactive position. Because if they do that, they're going to end up realizing they've lost the game.
Companies within the financial services industry are in the process of rewriting much of what they have done for the last 50, 100, 150 years. And when we talk to the C-suites, the single thing that we tell them is standing still is absolutely not a viable strategy. So embrace change, be more agile, be flexible, incorporate the notion of failing and accepting failure as a necessary step in the direction to ultimate success.